first session for the day. Patrick needs no introduction. The largest PE firm in Indonesia, one of the largest, if not the largest, regional PE firm in Southeast Asia. Since we have already started late, Patrick, I'm just going to jump into the questions. We want to maximize the time that you have with us. I just wanted to start with a big picture question. You know, I spoke about a possible recession, inflation, and all of that. But Indonesia sort of appears unruffled. You know, it's got a booming economy. It boasts of, at least the last couple of years, it had political stability. So big picture, what's next for Indonesia? Is it like making its workforce more competitive? It's modernizing the state-owned enterprises. What's the next big thing that you see for Indonesia?
Well, Joji, thank you for having me here. I don't know whether you can hear me or not. Okay.
Yeah, I think.
Can you guys hear me?
No.
Well, Joji, thank you for having me here. Pleasure to be here. First in-face meeting since the pandemic with DealStreetAsia. I made a round of visiting our CEOs in the past few days. And what I see on the ground is that the business environment in Indonesia, generally speaking, is very strong. The demand continues to grow. The performance of different companies all depend on the quality of the management team and the quality of the execution. I think what I think is answering your question, a lot of credits we need to give to the government. They have done a good job in the past 7 years in creating the environment that is healthy for businesses. And going forward, my view is that most companies still have to focus on the fundamentals, on the basic stuff. Making sure that they are good in what they are doing, executing well, reducing their costs, being innovative. Basically, it's all the basic things. In terms of how I look Indonesia going forward, I think the market is still going to be robust. I don't see any reason to be exceedingly worried in the near term. Obviously, we all know the long-term challenges in terms of human capital and whatnot. That continues to be area that we as a country need to develop.
Yeah, Patrick, just sticking to what you said, when you last spoke at a summit, it was in late 2021. At that time, it was a very different world in terms of what has really changed, in the PE space at Northstar over the last 12 to 18 months.
Well, the one thing that changed is obviously when we talk about high growth companies, the valuation had crashed. And having said all of that, the business environment and the business performance, at least in our portfolio, most of them, 99% of the companies that we have, actually are doing a lot better than where we were 3 years ago. The environment where capital is becoming more scarce actually force companies to be more disciplined, and as I mentioned, to focus on the fundamentals. So I think I'm actually pleased that the profitability, and we talk about the metrics, all the KPIs, the company generally have done a lot better. So there's two directional things. One is that the valuation had gone down by a lot, but the business performance continues to improve. And I expect that to continue to continue this year.
You spoke about valuations crashing. The biggest crash obviously has been GoTo. They listed last year, the valuation is down 70%. How much of an impact has this had on the Indonesian tech scene?
Maybe I just address what my view about, and I have to be careful because GoTo is a publicly listed company, so I don't want to, I don't have much non-public information. I'm not on the board, but I stay close to the company. If you look at GoTo, I think what they have disclosed is that all the old Gojek business lines are now profitable, every single one of them. right? And if you look at the e-commerce side, every player in the market has been increasing the take rate. And if you are following our friend in Singapore, C, I think they have disclosed that they had reached EBITDA break even for their e-commerce business in Indonesia. And the big opportunity that the company has is this thing called GoTo Financial, our financial product. And our criticism has always been that the execution has been exceedingly slow. But to their defense, when we started GoTo Financial, we started it in Gojek. And what we had learned is that the use case for financial services in ride-hailing business is actually minuscule compared to e-commerce. And we were lucky that Gojek then merged with Tokopedia. And this creates a huge opportunity for GoTo Financials that is still not yet untapped. And the reason why they have not been as fast as the other players is that when two big companies merging, it takes time to integrate. It takes time to be able to put all these businesses together. But looking at the company, what I'm pleased is that we really have very good business leaders in GoTo. So I think it's a matter of time. And again, please rely on the public information. But I'm quite confident that it is in a good place. So going back to your first question, I don't know whether you asked this question or not, but I actually have a view that at this moment, from risk-reward profile perspective, late-stage tech offers the most interesting opportunity.
Very interesting. Yeah, Patrick. Just just extending, what you spoke about GoTo. How do you see the other listed, big picture view, the other listed companies in Southeast Asia, be it Grab, Bukalapak, C Group, Property Guru, Bibli, all of them, their valuations have crashed. So have we hit the bottom, or you think that 2023 there'll be a lot more pain ahead?
To be honest with you, I don't spend a lot of time evaluating a lot of different companies. But I think it all depends on your conviction about the business model, the CEO, the leadership, and then the business prospect of the company. I can only speak for what we continue to monitor on a daily basis. But I do think that late-stage tech offers a situation where a lot of the business risks have been removed and valuation has been adjusted. Having said that, you can buy Alibaba stock in China at 8 times earnings, right? After you take out ants and whatnot. So on a relative basis, it doesn't look cheap, but I do think that as China open up and emerging from the COVID crisis, the Chinese stocks will re-rate, and on a relative basis, the situation will change, hopefully by sometime this year.
Yeah. Just one last question, a related question on Bank Jago, in the sense that rapid growth over the last 2 years, it's already profitable. But do you think they're still at, just scratching the surface because they haven't really utilized the benefits that they have in the GoTo ecosystem yet?
Well, with a full disclosure, I'm totally biased because we are obviously a big shareholder in Bank Jago, but the short answer is yes. I think that for the reasons that I just mentioned about GoTo Financials, we are only scratching the surface, and early indication suggests that we are on the right track.
Yeah. I just want to move to the VC space. So especially in terms of the growth deals in 2020 and 2021, they were largely led by the US-based funds or the funds outside Southeast Asia. But with those funds pulling back, do you see a lot of Southeast Asia focus or regional funds being a lot more active in 2023, including Northstar, both your P and VC arms?
Well, we continue to be active. We are still investing. We are not, the thing about people like us is that when the market is up, that means the future is bright, then you invest. When the market is down, that means that it's even better, then we still invest. By definition, we are a long-only player. And our investment is, we cannot time the market. But obviously, there are certain things that have changed. When we go into early stage companies, one thing that we have to look is the runway, right? Because we cannot bank on somebody else comes in at 2x, 3x our cost basis, and somebody else will come in after that. So we need to make sure that whatever the company is planning to do, they can have enough runway that is reasonable for us to think that it will then become an attractive investment for somebody else. And we also don't see that, again, the situation where things just continue to go up and up and up in terms of valuation. I think those days are, for the time being, are over. So we just have to be realistic. So it's just go back to business, to life as it should be.
What's the valuation corrections you've been seeing, Patrick?
Either you don't get funded or you get funded, and the valuation doesn't matter. Just take the money. Every time that somebody, one of our companies comes to us and say that we have this offer, just say that take it. It's okay, just take it. Because otherwise you don't get funded and you die.
Yeah. I just want to come to the theme of our session. You are among the few private equity firms globally that's also building out a VC strategy. Can you just take us through what made you get into the VC play?
There is a video in YouTube by Warren Buffett, and he said that the whole private equity industry is a sham. There's a $1 trillion committed capital. The purchasing power is 3 to 4 times higher than that because people are putting a lot of leverage into these businesses, and basically it's just financial games, right? I would argue that in our part of the world, that is different because the definition of private equity, especially where we are stating today, is actually more of growth investment. We don't rely on putting a lot of debt into the company and then creating equity value as the debt gets reduced. We actually create value as this company grows, enter to new markets and whatnot. And I would argue that it's not actually dissimilar to early stage. And the other thing about early stage in this market is that we are talking mostly about consumer-facing, digitalized business model. We are not talking about like deep tech, innovation in healthcare. We are not looking for new cure for cancer, right? We are talking about digital warung. We are talking about video streaming. They are essentially just consumer tech. And this is, from where we are sitting, we think that there are a lot of similarities that we can bring that we can bring to the table in terms of like sharing our experience and our learning with our early stage investors. And matter of fact, we have been doing early stage investments from our firm's balance sheet since 7 years ago. And the reason why we managed to raise this venture capital is that we believe that it has so far become an integral strategy for Northstar, that we go in early and then at certain states our private equity can come in to provide growth capital. And we have done this so many times with pretty good track record. So for us, it's not an inflection point, it's just a continuation of what we have been doing.
Got it. I just want to ask you one quick question on exits. Exits have not been easy in Southeast Asia, and the current environment is going to get a lot more tougher. How do you see this play out in 2023 and beyond?
Joji, my view about exit is that if you have a good business, it's easy to exit. If you have a bad business, it's terribly difficult to exit. Okay. So even today, under difficult environment, we still can exit. There are still, we are in certain discussions, our best companies are still getting funded by people who are here today, masquerading, attending this conference, but they're actually trying to do a deal. There was an announcement by General Atlantic, they put $130 million or whatever that number is into Chimori. It's an excellent business. And yes, certain sectors like the capital market probably is shut down for a little while. But that's how life has always been. Business at the end of the day is cyclical. You see all the cycles. So I'm not particularly worried about exit.
Yeah. My final question to you, Patrick, is how do you see the future of Northstar? You started off as a PE firm, now you're doing as a VC business that you're building. So do you think you will do, special sets or other kind of funds or country-specific funds? Where's Northstar headed?
We are not that smart, so we don't have any new plan. Our plan is to stick with what we know and try to make sure we deliver the best return to our investors and create value for our portfolio companies. We hope that when people talk to our portfolio companies, they can attest that Northstar has been a value-add investor for them. And if you talk to our investors, we hope that they can attest that we have been good partners to our investors, that we are transparent, and we don't do funny stuff. So that's all we do. We just focus on what we have been doing.
Got it. Patrick, thank you so much for your time. We have a hard stop because we were running late, but thank you for sharing your insights and being part of our opening session this year. Yeah, thank you so much for joining us.
Well done.
Thank you.
Thank you so much, Patrick, as well as Joji, for that engaging fireside chat to kick off our exciting morning.